Hello, I'm Martin Smith and this is your Maxiforex Week in Review. Today I'll be going over some of the major financial events of the past week and discuss how they impact the global currency markets. But before we cover headlines for the week, let's look at last week's risers and fallers. Well, the euro-dollar had a mixed week. After consecutive gains of last 3 weeks, the pair lost about 0.6% and closed Friday trading at 139.01. The British pound had a mixed performance as well this week against the dollar, making a fall of 1.14% and closing at 1.6082. The US dollar was making gains against the Japanese yen throughout the week, until Friday that is, when the yen rebounded. The strength of the yen rebound pushed the pair to 81.87 for a fall of 0.52%. Once again, the US dollar slid against its Canadian counterpart in a mixed week of trading. The fall wasn't very significant, dropping only 0.06% and closing at 0.9710. Taking a look at commodities, gold had a mixed week that ended down thanks to a huge drop on Thursday. By the close of Friday trading, gold had fallen 0.77% to close at just under $1,417 an ounce. Meanwhile, crude orders had a poor performance, dropping 3.3% for the week. The orders were last trading at a little over $101 a barrel. Well, in the news this week, Japan's central bank is making its best efforts to ensure financial market stability after the country's devastating earthquake and tsunami. Before Japan's strongest earthquake on record, the country's greatest challenge was trying to rein in the world's largest public debt. The devastation Japan has suffered will naturally deteriorate those efforts and will have tremendous impacts on the rest of the economy. A scheduled policy announcement was pushed forward a day to enable the central bank to make a quick monetary policy decision to help the country cope with the financial fallout from the earthquake and tsunami. It's believed that the easing of financial policy could strengthen the domestic currency. However, the Bank of Japan has set up a disaster management team to assess the impact of Friday's quake on financial markets and on financial business institutions' operations. In the meantime, Japan's stock market has been something of a favorite with global investors this year. The broad TOP index was up more than 8.5% for the year in mid-February before the recent pullback and Friday's quake-related sell-off. The financial situation is hard to determine because all of the damage has not been assessed or even realized. With a potential for nuclear fallout still a concern at the Fukushima plant and cleanup efforts very much in their infancy, I think we'll have a much clearer picture of the Japanese economy by next week. In the UK, house prices hiked in February as a result of sudden demand and supported values and countered mortgage lending restraints. The average price of a house in England and Wales rose by 0.3% from January to £222,456. Last year, the values fell 0.5%, which was the first annual decline since October 2009. Banks have also approved 45,723 mortgages in January, about half the average over the last decade. The Halifax unit of Lloyds Banking Group plc reported that housing prices fell last month and said that economic uncertainty is likely to weigh on demand. The Bank of England maintained its emergency stimulus to nurse an economy going through the biggest fiscal squeeze since World War II. According to Econometrics, which combines initial housing transaction data and other price measures to produce an estimate for the most recent month, the number of transactions rose about 5% to 41,200 in February. This makes it the second weakest February since 1995, when land registry data began, and it's also about 61% of the average monthly sales transactions over the last 16 years. Taking a look at the rest of Europe, the leaders of the 17 nations that make up the euro have come up with a solid plan to tighten economic cooperation. This clears the way for German Chancellor Angela Merkel to finish a comprehensive package to offset the debt crisis. The blueprint, intended to boost competitiveness by shortening deficits and reducing labour costs, sets goals rather than binding targets, helping to overcome objections to the version proposed last month. These Euro region leaders reached an agreement in principle on the pact for the euro. However, the leaders are still discussing the other elements of the package. The efforts aim to stop a worsening of the region's debt crisis and lower borrowing costs, enough for Portugal and Spain to avoid having to seek emergency aid. The leaders have set March 25th as the deadline to approve a comprehensive package. Well, that's all we have time for now. We hope you enjoyed the weekly review and we hope you'll join us next week. Until then, be sure to visit us at MaxiForex.ru.